Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Monday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. Today's Monday mortgage market update, I'll focus on the data this week that will affect mortgage rates the most, as well as this balance between consumer sentiment and fear of re-triggering inflation that's going on and how that could affect things as well. So this is the week, the first week of the month, where we'll get the most jobs data. So starting Wednesday, we've got ADP employment, then Thursday, initial jobless claims, which is a weekly report. But then Friday is the biggest day. We get unemployment rate and non-farm payroll. So ADP employment will show the availability of jobs in the private sector, whereas non-farm payroll shows it in public and government sector. So typically for those two, if there's a lower number than expected, that is good for mortgage rates. It shows a weakness in the job market. Higher than expected unemployment rate and higher than expected initial jobless claims is also a good thing for mortgage rates typically. Now this week, ADP, the number is expected to be 143,000, so down a decent amount from last month. Non-farm payrolls is expected to be 160,000. Initial jobless claims is projected to come in at 243,000, which would be an uptick over last week's already high number of 242,000. If that number comes in, especially in like the 260 range, I think that would very much help mortgage rates, because that number typically does equate to unemployment rate the next month. Unemployment rate Friday is expected to tick up a little bit to 4.1%. The combination of a higher than expected initial jobless claims Thursday, and especially if we get even higher than expected unemployment rate, that would be a concern and would be a good thing for mortgage rates. Now, the other thing to consider is tomorrow, Trump has announced he is going to pass additional tariffs. Now, the past couple times he has done this, he's pulled back on these tariffs, and the market has kind of expected that. And I would think that if he does go through with these tariffs as he's talking about, that would be a negative factor. Now, what's interesting about this current market dynamic the past couple weeks is that consumer sentiment has really been a driving factor. These typical reports showing jobs, inflation, there hasn't been a lot of that data the past few weeks, and yet the market has been improving, and it's these consumer confidence, consumer sentiment reports that has seemingly been the main cause. There isn't any kind of report like that this week, but I could still see if there's a notable outcry of some kind when these tariffs do go through that could balance out some of the fears of inflation. It's kind of this seesaw right now between, yes, tariffs will probably increase inflation, bad for mortgage rates, but consumers seem to be scared of this, seem to be fearing higher prices, which could lead to less spending, meaning less inflation. So right now, that scale has been definitely tipping on to the side of the consumer fears outweighing fear of an uptick in inflation, but it could very easily tip the other direction. I'll probably shoot a separate video talking about the Central Texas housing market a little bit. I saw a really good article today on that, so look for that in the next couple days. And then certainly if anything major happens, one of these reports comes in dramatically outside expectations, I'll shoot something on that. But if you have any questions or comments, shoot them below, or feel free to call, text, or email me. But thanks for tuning into this video, and I'll see you next time.